In this video, I will walk you through a backtest of the most profitable and simple trading strategy I have used in my 8 years of trading. No fluff, no secrets, just real backtested results and a step-by-step trading plan that has helped traders achieve results like this the past couple of weeks and since the last video was uploaded. 100% free value, just download the trade plan below and follow along. This strategy proves how simple trading can be. It doesn't require you to learn 100 different concepts. Fair value gaps, time-based liquidity, and market structure is all you need. Trade one asset and one session for 60 to 90 minutes per day. It works on Forex and futures, both of which we trade on live stream 2 times per day, London Open and New York Open. But let's not waste any time. Let's get into the backtest. I think you're going to be massively surprised at what is possible by simplifying your trading. But before we get started, if you find value in this video, don't forget to hit the like button and subscribe for more videos where I focus on showing you guys very simple, rule-based trading strategies. So what is this trading strategy? I've named it the RTC model, one of 2 models we trade on live stream every day inside the Discord. They are basically the same model. One is for continuations and the other is of course for reversals. It's the best strategy I've traded over the past 8 to 10 years. It's low risk, high reward, as you can see here. Plus 14R trades are possible. And also today, plus 9R trade was possible on GU during London session. But this is what just makes the continuation, this RTC, the best one of the 2, as it means that we're trading with momentum. We're trading with the overall trend in the market. It's just a 3-step process. Identify the trend, identify 5 or 15 minute fair value gap, and then wait for an entry confirmation. So the first thing to do with this strategy is to mark up your charts. No discretion or completely mechanical levels by using time-based liquidity. What do I mean by this? Liquidity levels that are related to key sessions or times of day. So we have previous week and previous day high and low. We also have previous session high and lows. So let's get your chart set up. Firstly, you need ICT kill zones and pivots by trade for op. I'm currently creating a Rise Trades branded indicator, which is just going to have all of the things that we use available to members soon. But yeah, essentially this for our session liquidity, right? So copy these times in Asia, London, and New York AM. Make sure you're using New York time zone. And then obviously that just gives you our Asia session, London session, and then obviously New York session you can see here. Next thing to do is come up onto the daily time frame and mark in your previous day high and lows. Obviously, if they're relative, you can see here today that this previous day high has already been taken and we're trading above. Therefore, it's not really relative anymore. This is just going to allow us to identify the next probable draw on liquidity. So for the past week or so, we've been targeting this previous week high, which I've just drawn in. And as you can see over on GU today, we traded into that previous week high. The fact that we've been targeting that allowed us to potentially hold a trade for a total of 9R rather than just the 3R into previous day high. So once you've got your chart set up, we're on to step 2, fair value gaps. Identify market structure, 5 and 15 minute time frame. This is what we're trading with the RTC model. You're going to wait for a pullback to the 5 or 15 minute fair value gaps, and then you're going to trade from those using the confirmation of step 3, the entry model. Find an opposing fair value gap in the retracement leg into the 5 or 15 minute time frame, and then wait for that bullish fair value gap in this scenario to be inversed with a candle body close below. And then we enter shorts in this scenario towards what this red line may be, our previous day low, our previous week low. Okay, whatever that may be, and not necessarily those, as you'll see later on in the video. Entry checklist, make sure you have this with you when you are trading at all times. Just make sure that obviously each checkbox here is ticked before entering a trade. Okay, this is one of the most vital things that that traders skip, is having a rule-based entry checklist when trading at all times. Okay, you need to make sure that you are trading with a proven edge in the market and focusing on a step-by-step trading plan every single day. And then onto some strategy tips. So consider these tips to improve your performance. So focus on trading at only high probability times of day. London session 2:30 till 4 AM gives you that 90-minute window. New York session 9:30 till 11 AM gives you that 90-minute window. This is all you need to become consistently profitable. Choose one of these sessions or trade both of them. It doesn't matter. We trade both of them live in the Discord every single day. Target a minimum of 2R on each trade, 2 times risk, and then wait for candle closures for entry. Like I said, candle body close through a fair value gap is our entry, as you will see in the coming videos. So make sure to download this training plan down below where you can get access to this and have it with you at all times when trading. But right now, let's get into the backtest. So we're going to be backtesting this strategy on FX Replay. At the end of the video, we will take a look at all the analytics and all of the trades taken during the whole month's worth of backtesting. We're going to be backtesting this one strategy that I've just ran through with you guys, and we're going to set a few rules for this backtest. Number one, we're going to set a fixed risk reward of 1 to 2R. Number two, we are going to move our stop loss to break even when we reach 1R running in profit. And number three, we're going to backtest NASDAQ during the New York AM session. Everything we do in this video does still apply to London session, and we do the same thing during London session on live every single day as well. But this backtest will be New York. So the first day that we're going to be testing is Thursday, the 2nd of January. Here you can see we've got that fair value gap on the 15-minute. We're going to look for a pullback into this fair value gap and potentially target Asia low and this low down below, because 5 and 15-minute structure here is currently bearish. So we're looking to ride that momentum. As you can see, price now trades up into that 15-minute fair value gap and then ends up just closing through that gap on the 15-minute as well. So that trade is now invalidated. Does end up continuing lower. However, there would have been no entries in here because of these multiple fair value gaps here on the 5-minute. If you wait for this to get inversed, there's going to be no risk reward when you have your stops all the way up here. So on to the next day, Friday the 3rd. We've got previous day high above that price might want to draw into. This is why we map these out. Price is obviously currently bullish on the 5 and 15-minute time frame. So what we're looking for now is for price to pull into a 5-minute fair value gap, or obviously a 15-minute gap. So let's wait for price to start pulling back. As you can see, pulling back into a 5-minute gap here. Let's see if we create any lower time frame gaps that we can look to trade from. So there's a bearish gap here, obviously needs to be traded above first. There's a potential entry here, closure just slightly above that gap, or you could wait for a more clean close. But if we were to take an entry on this, your stop would be there. You'd be targeting 2R. See that 2R comes in before that previous day high that we've already identified. So we'll be placing every trade with 1% risk of the 100K account. So market order, 1% risk. And here you can see we've executed that. We want to go to break even at 1R. Okay, so we missed the break even there, but break even once again. Just make sure that doesn't give us a false win, and it didn't, so that's fine. A break even trade, but now we just need to check 5 and 15-minute time frame. Are we still bullish? Are we still looking for longs? 15-minute is obviously still very bullish. We do have fair value gaps down here. Do we draw into those? We do. So still 5 and 15-minute fair value gap. We can look for longs with the RTC model. So let's have a look on the lower time frames. We do have 2 5-minute gaps here, so they would need to be inversed for us to trigger a trade. No close above. The price does finally close above here. Stop loss is going to be slightly bigger than the last trade that we took. Once again, we'll get break even at 1R. Break even now. Let's see how the trade plays out. Just about tagged out. Obviously, we did have to trade through previous day high, but if your higher time frame bias is long, that isn't necessarily an issue. So that New York session done, on to the next day. So Monday the 6th of Jan, looks like we're just about to switch bullish if we do close above these highs, and then obviously we've got a 5-minute fair value gap down here. So let's see if we draw into any of these 5-minute gaps. At the moment, it doesn't look like we will. Okay, and 11 o'clock has passed. So just no pullback into a 5-minute gap. I doubt there was anything on the 15-minute either. There was actually this slight 15-minute gap that we did pull back into there. So was that a missed trade? No, because there was no lower time frame fair value gaps to look for entries from, so that's fine. On to the next day. So Tuesday the 7th, we've got previous day high above, obviously previous day low below. Just trading above Asia high, and then obviously London lows haven't been taken. Let's see how this one plays out. So huge displacement at 9:30 open. I say you always want to see what price does between 9:30 and 10 o'clock. That will be the tell for what price is going to do for the rest of the session. Okay, so far it's looking like we want to draw lower. We've just created a 5-minute fair value gap with a lot of momentum after shifting lower below this low. So that's our shift lower. We're now bearish on the 5-minute. Plenty of liquidity in here below. See, first target, London session low. So what we need is a pullback into a 5-minute gap, of course. So price does pull back quite aggressively. drop down to the lower time frames here and wait for a bullish gap to get inversed. Obviously, we do have multiple here, nothing closed through as of yet. Do have another new gap on the sweep of this internal high. So if we close below there, that could be an entry. And there's the close. So close below after pulling back into the 5-minute fair value gap. We're just going to risk reward of 1 to 2. Place an order with a 1% risk. Break even once we reach 10R as usual. So 1R reached, we can move stops to break even. And price drive straight through our take profit there. Obviously, this is a day where if you're using higher time frame bias and stuff, there's potential that you could have targeted further, especially down at these lows just here for 3R. And then obviously previous day low is a long way off, but there's potential that we even run there. So good trade. We're still within our session times though, so if price does keep drawing lower, there's potential we do go to previous day low. Like I said, there is still the potential to catch an RTC because there's lots of momentum in the market. These are the ideal conditions for this strategy. So once again, we need to wait for price to pull back into an area that we're looking to enter from. 5-minute fair value gap here. So there is potential for another entry if we get that on the lower time frames. So yes, looks like we do have a trigger for an entry right on this candle. So bullish fair value gap inversed, nothing else in the way. Once again, 1 to 2 target. Break even at 1R. Let the trade play out. And as you can see, demolished again. So that's 4R. With just using 1 to 2 risk reward in that one session. It's crazy the power of 1 to 2. It's crazy the power of this strategy. But obviously, that's a really good session right there in terms of price delivery. Super clean, lower highs, lower lows into all the way to this previous day low. If we had held that initial position to previous day low, would have been the potential there for 8R. 8R plus this 2. That's a 10R session right there if you're using your higher time frames to build your narrative. Okay, so not really looking for anything here today. Obviously, we do have that 15-minute fair value gap. Price is technically bearish, but because we've already traded into that gap, I wouldn't really be looking for it after, due to this being before the session. So drop down to lower time frames. We obviously need a 5-minute gap. We do have a 5-minute gap here. Let's see what happens. No inversion, no trade. Are we back above that 5-minute? Not quite. So no close below there, no displacement through on this candle, so I wouldn't be looking to enter that one. 5-minute time frame is still holding the 5-minute gap though, so there is potential. However, I like to see displacement for entries. And obviously that displacement would have kept us out of that trade, so that's fine. No trade, very messy day, messy price action, not a lot going on, very range bound, so avoided that one. It's worth noting though that displacement is very important when trading the strategy, but like I say, we're looking for trades that are with momentum. If there's no momentum for the entry, then you don't want to be taking an entry on that trade. Okay, and in that market yesterday, it was just very, very choppy. No momentum in the market after that initial push lower we just chopped around. So Friday the 10th, this is NFP day. We have a large fair value gap created from NFP here. We have previous day low below down here. So that's potentially where price will want to draw to with this 15-minute structure. So we drop down onto the lower time frames and we look for entries at market open. So we've got a 15-minute fair value gap. That's an area we want to look for, and we do have previous day low below, which is a nice target. Immediately as the market opens, we do inverse this fair value gap here. So that triggers an entry right at market open. Market open is where we're looking for displacement to come into the market to draw towards liquidity or rebalance price. So once again, a risk of 1% and targeting a 1 to 2 position here. Go to break even at 1R. It's a very tight trade. There's a high likelihood that we do get stopped to break even here. As you can see, we do straight away. Price does end up, I think, going to target by the looks of it. So price does end up running to target, but break even trade there with our 1 to 2 rule. But as you can see, price does end up drawing into that previous day low as expected. Okay, with that 15-minute bearish order flow, 15-minute momentum, trade into that 15-minute gap, continuation ends up going. Even though with our management for this trade, we got taken break even. That's fine. Okay, on to the following Monday. We can see we're still very, very bearish here on the 15-minute. There's no reason to be looking for anything but shorts in this market structure. We have a 15-minute fair value gap above current price. Within this, current dealing range, the 15. Internal to external on the 15-minute time frame is what we're looking for. So we need price to draw into a 5 or 15-minute fair value gap. So price traded into this 15-minute fair value gap, tagged into it, and we did actually get a valid entry here, which I've missed. I've skipped price forward way too far. So the entry for this one would have been on this candle here, and obviously stops above that candle, targeting a 1 to 2. Let's see what would have happened within that for that trade. So we'd be at break even now, and you got taken out break even very quickly. So that's fine. We missed a trade, but it would have been a break even trade. So Tuesday the 14th, I wouldn't particularly be bullish here. I think that this high here down to this low is the current structure on the 15 minute. So I would arguably be bearish in this situation. But for me, the price action from this 8:30 news isn't ideal at all. So you'd want to see a breakout of this 5-minute news candle at a bare minimum before looking for entries. So the price does trade into this 5-minute gap created from that news candle. Then we do actually have this 1-minute inversion there. So this could potentially be an entry, trying to ride the momentum off the back of this news. So we'll target a 1 to 2 with our rules. Obviously stops to break even at 1R. Okay, now we can move to break even. Let this one play out. Ends up taking us break even. That's fine. Okay, so 5-minute fair value gap, 1-minute inversion, break even. Absolutely fine. Good execution, and on to the next session. Okay, so Wednesday the 15th. I believe this was CPI day with a crazy candle like that, but obviously a huge 5-minute fair value gap created. Price trades back into it. We now just look for entries, trying to ride that momentum. So still nothing here as of yet. Need a gap to be created. We've got a gap here now. Small one, but if that gets inversed, we've obviously got a large dry down, sweep out liquidity into the 5-minute gap. Inversion would trigger an entry. And there you go. So entry on this, once again, a 1 to 2 risk reward. Place our order 1% risk. Break even at 1%. Get to break even. Let the trade play out. Free trade. And as you can see, another 1 to 2 with this momentum. Okay, so we're just riding the back of this momentum from that 8:30 news. Very, very simple, but it's just so good to be able to take these entries, and it times our entry perfectly with when price wants to run. The inversion fair value gap gives us that confirmation that price wants to continue out of the 5 or 15-minute fair value gap. So Thursday the 16th of January, fairly bullish price action on the 15-minute here. You can see this 15-minute fair value gap here got tagged into at 8:15, so I'm not looking to reuse that fair value gap, okay? Price could still hold and we could still go higher, but I'm always looking for new fair value gaps to be created or trade into unmitigated gaps within current structure. Price just ends up going lower anyway, but obviously still holds this low. We haven't closed below it, so it's not really, so we don't really have any bearish structure as of yet. And then price trades higher anyway after our trading session. So that's fine. On to the next. So Friday the 17th, really bullish price action once again. As you can see, we're just trying to ride momentum. So what do? We wait for a pullback into a 15-minute gap. So here we've got our first 15-minute fair value gap. Obviously, there's even more down below as well. But let's see what price does at market open. Price drives lower into the gap. Obviously, we need a bearish fair value gap to be formed at the moment so that we can look for longs. Price drives lower, takes the low again. Obviously, this 15-minute fair value gap is fine because we do have more below anyway. So that's fine. We are still holding this 15-minute structure and this 15-minute gap, even though we've traded below that first 15-minute. So we finally created this bearish fair value gap here after sweeping lows inside, obviously, the 15-minute fair value gap. So we need a close above. We get that close above. So now we can take an entry, targeting 1 to 2 as always. So you can see if we just target back to this high, the potential in this strategy obviously is so much more because the risk reward up to that high is like 3 to 4R. So that's not unusual with this strategy. It's just in this back test, we're just targeting 1 to 2s. So 1% risk, get to break even at 1R as usual. Price gets to break even and then takes us out at break even. That's fine. Same goes as one of the examples earlier. We can still look for buys because we are still bullish on the 5 and 50-minute time frame. So we can still look for entries here if something comes within our session time. So we end up sweeping lows again. Obviously, we do have 1 minute there. We do have 2 minute. We do have 3. So we use the 3-minute time frame. we can look for closes above this gap here. That is going to trigger longs towards highs once again. So let's see if we get a close above, which we do after sweeping lows, just like that first trade, just a different time frame. So stops, obviously at the low, targeting a 1 to 2. Price drives higher. We need to get to break even at 1 to 1. We can now get to break even and let the trade play out. And there we go, 1 to 2. So this is the reason why we've got to be patient. Okay, we took that first long, we got taken break even. That's fine, it wasn't a loss. Had we not moved to break even, it would have been a full loss. So this is why we use this break even method. It's slightly different within the group and there's a lot more refinements, but from a very basic standpoint, you can see the power of moving to break even. Too many people don't like doing that, and too many people like either stop loss or take profit, but that saved us 1R. Today, had we taken that first loss, we'd have ended the session +1. Because we took break even, we ended the session +2. The difference moving to break even has on psychology is so huge. For any members that come in, they soon realize the power of moving to break even when trading this strategy. So on to Monday, the 20th of January. Currently quite bullish here going into New York Open, as we can see above all structure. London lows got taken and we displaced higher at 8:30 news. As you'll see, 8:30 news does inject a lot of volatility, and sometimes you can end up trading before. So you'll see this here, 5-minute fair value gap. I wonder if there was an entry inside of that. We drop down the time frames, you can see 3-minute inversion. You could have taken entries on this, targeting higher prices. So use the high probability times of day, like I've said, 9:30 open, but also 8:30 onwards is high probability if there is high impact news. Make a note of that one. But right now, going into the session, we need to wait for a pullback into this 5-minute fair value gap and then look to see whether we get any entries from there. Price drives higher. That is also a 15-minute fair value gap now as well, small 15. So tapped into there. Now we need to wait for an inversion. So we do have this fair value gap here, but we also have this one above. Those inside the community will know the filter for this one. So let's see if we get an inversion of that. We don't inverse this one here either, and we end up driving lower. So at this point here, we need to zoom out. Are we within 15-minute fair value gap? We are not. Are we inside a 5-minute fair value gap? We are. So this 5-minute structure is still holding. So there is still the potential to look for longs from here. So right now we need an inversion of this fair value gap to jump into longs. Let's see what we get. So we do end up getting that lower time frame inversion, but after we broke below this low. When we break below a higher low, that is then a shift of market structure. Okay, so we go from being bullish to being bearish as we take out a previous higher low. 15-minute time frame as well, breaking below this low. So yeah, just nothing there for longs. So going into the next day, Tuesday 21st, we've got Asia session lows below, London session lows below. We've taken Asia highs, London highs. Let's see what we get here. Obviously, market structure is still bullish, so there's not really anything to do at this point in time because we don't have any bullish fair value gaps either. We've closed below this one. So let's see what price does at market open, as I always say, between 9:30 and 10. So price drives lower, creating a 5-minute fair value gap in here. So a large 5-minute fair value gap has been created. Obviously, now we can start looking for shorts. Very, very simple, just following market structure as always. London lows still haven't been taken, obviously the same with Asia. So let's see whether we get any trades out of this 5-minute fair value gap. So at the moment, we do have this 3-minute fair value gap here. We can look for that to be inversed. The price inverses, not the greatest of entries if we do take one here, but there is a lot of momentum behind it and our bias is towards downside with 5 and 15-minute structure. So we'll place a trade here. We'll see how it does. Like I say, it's not a great entry because we are so close to this low. So obviously 1% risk as always. Move stops to break even at 1R. Price does end up going lower. Obviously takes our break even point here. So we would be at break even. I haven't moved to break even yet. So let's just make sure that we do get taken out break even. We don't want this to skew the data, and we do. So that's fine. Break even trade didn't end up running for 2R. Obviously that's because we got a large stop loss. Entry wasn't that great close to the lows. So that's absolutely fine. But it was still a valid trade overall. So market structure here on Wednesday the 22nd. Similar to yesterday, we'll just wait to see what market open does. Market open drives higher, massive move on the 9:30 open here. Again, driving higher. Let's see if we've created this fair value gap here. This is what we're going to want to look for price to pull back into. If we pull back into here, we can look for continuations, RTC. Price does pull back. Doesn't create any fair value gaps as of yet on the move down into it. And then price drives higher once again. So no entry there. Let's wait for another move. Maybe there's something on the 15-minute that isn't. So yeah, just no trades during that day. Obviously no fair value gap created on that move down into the gap. So therefore, we're not looking for any entries on that day. So Thursday the 23rd, let's see what we get here. Reasonably bearish at the moment. Traded into this gap here. Obviously quite a lot of choppy price action though going into open. So we need some displacement in either direction. Obviously this is the lower high to lower low. So as long as we're within this range, we are still bearish. So we need bearish fair value gaps to be created, which they aren't. And then we do drive higher, obviously well beyond our session times here. So doesn't end up being anything to do there. Obviously 5-minute as well is the same structure, this to this. And then obviously we didn't pull back into this 5-minute gap until after our 9:30 till 11. So no trade. On to Friday the 24th. So reasonably choppy again. So we're going to wait to see what price does at 9:30 open. We do drive lower. And we do obviously trade out of this 5-minute gap. The only reason I wouldn't look for longs out of this 5-minute gap is because we closed below it. Okay, so this 5-minute candle went lower. We closed below the gap. Therefore, for me, we're not respecting that gap. Even though we do drive higher, it wasn't the fair value gap that was respected in this situation. Rules are rules. And we do tap down into another 5-minute gap here, which we created on that move up. So we could potentially look for longs from here. Drop down to lower time frames. No fair value gap there as of yet. And then we drive lower underneath that 5-minute. Therefore, once again, invalidation of that trade. No 5-minute bearish gaps formed. Just a very messy day. No price action worth trading in that day there. So on to Monday. Let's see what we do at market open. We drive higher. Create a 5-minute gap. Let's see. Is there 15? There is a 15-minute gap there as well. So we can look for price to trade back into these gaps here. And then we can look for longs potentially, RTC. There we go, bearish fair value gap created on the move down into the 15-minute gap. So 15-minute fair value gap, 3-minute inversion, triggers an entry. We can take an entry here, stop at the lows, targeting 1 to 2. Let's see how this plays out. As always, 1% risk, break even at 1R. Get to break even very quickly, obviously within the first 5 to 10 minutes. Take profit hit by 10 minutes later. Okay, so 2R in 10 minutes. This honestly, it's crazy what can happen out of these 5 and 15-minute fair value gaps. This is what it's all built off, building with momentum, as I keep going on about within every video about this strategy. On to the following day, we are still quite bearish at the moment, lower high to lower low. So as long as we're within that, we're going to be looking for shorts. There's this 5-minute gap that we do tap into at market open. See whether there's anything on the lower time frames here. Price drives straight through these lows, obviously nothing to do on a massive candle like that. So now we just wait for new gaps to be formed and try and catch a move with this momentum. So we trade back into these 2 5-minute gaps here. There's probably a 15-minute, there isn't. So these 5-minute gaps here could act as our entry zone. So let's see whether we get anything on the lower time frames. There's a lot of momentum that price has pushed up into. So there's this large gap here that we'd need to break below to form an entry. And price just continues driving higher. So no entry there. Let's see where maybe we've shifted higher. We have, but we haven't traded back into a 5-minute gap yet. So the moment we shift higher, we look for trades into these consecutive 5-minute fair value gaps here. If we trade into there, we can get an inversion out of it and look for longs. We don't get that. We do trade into this fair value gap though. So again, there's another fair value gap that we can look for entries from. And there was actually an entry that we've just missed here. So a very, very small fair value gap, which is fine. Still a valid trade. Obviously entry would have actually been here, but we're going to have to enter off of this candle because we're late to this trade. So a 1 to 2, as always. Let's see what happens here. So a late entry. Break even, I believe, has probably been hit here. It has. So we can move to break even. Price takes us out break even very, very quickly. Good trade, managed well, even though we were slightly late. If a valid trade, break even, on to the next. So we have this 5 and 15-minute fair value gap here at market open that we drive into. We have just inversed this 3-minute gap here. Also the 2 and also that 1 minute. Okay, so we can take an entry based off of this inversion fair value gap. Entry here stops towards the highs, and then targeting 1 to 2 as usual. Let's see whether we get any momentum on this day here. As you can see, price drives straight into our target for 2R on that one very, very quickly. Once again, really nice momentum play out of that fair value gap right at market open for 2R, done within 10 to 15 minutes at market open. So coming towards the end of the month here, very messy price action, lower high to lower low. So we need a breakout at either side. We do get that breakout. We do create that fair value gap. I can't imagine with that price action, we would have got an inversion from there. Let me just draw this out. So fair value gap was there. Obviously it doesn't trade into it here. That was what was creating the fair value gap, and then no inversion. So no trade in terms of longs after that initial price action. So we do drive lower after breaking below this high low. There was actually a 5-minute fair value gap here. Let's have a look whether there would have been an entry within that. Very small fair value gap that did get inversed. So potentially we've missed a trade here. It would have been a break even anyway. Okay, so there's a couple of break even trades we have missed now. So as always, there's going to be mistakes made. I still make mistakes now, 10 years into trading. Since first finding out about trading, 8 years from properly really getting educated. So these are our results for the end of month. We finished on $14,000 in profit on a $100,000 account. That is extremely, extremely good. A 100% win rate is not realistic. I would say maybe we've missed a trade or two in there. So these 6 break-evens here did probably stop a lot of losses, okay? So a lot of these break-evens probably would have actually been -1, but because we moved to break-even very quickly, which a lot of traders do not like doing because they just have hope that their strategy is going to play out. But for me, if the market's not moving, I'm going to take a break-even and be done, okay? Because it smooths out my equity curve overall. As you'll see here, obviously we went through this period of break-even, break-even, break-even during a choppy period, okay? So if the market isn't delivering in a very clean manner and there isn't much momentum, I'm happy to take break-evens, because this could have been a period of, you know, 3 trades or whatever it was, and you could have got taken out for -3R. But for me, coming out of break-even is a much better scenario. So then when the market starts moving, my P&L starts going up and my equity curve starts climbing again, okay? Smooths out your equity curve, and mentally it's so much easier taking break-evens than taking losses. So yeah, these 6 break-even trades did prevent the losses and obviously do have an effect on this overall win rate. But of course there is going to be a few losses month to month as well, so do not expect 100% win rate. So we took a total of 13 trades and 7 winners. So what's that, like a 50 to 60% win rate if you were just to class the winners as obviously winning trades. Best win was 2%, of course. Average duration 45 minutes, very normal for me. Obviously no losers, but a lot of break evens. But yeah, ending the month on a total of 14% is very, very doable with the strategy. And there's obviously the calendar as well. These red days weren't technically red days with the backtest, but you will end up getting red days overall. But just imagine 100k account. Obviously, there's members in the group like PJ who's just got funded 400k. Imagine trading a 14% month on a 400k account. That's going to be quite substantial. Okay, you're nearing $50,000, $60,000 month just on this backtest alone. So yeah, if there's any questions about this backtest, drop them down below. If you want to join us trading this strategy and the RTR strategy live every single day during London session and New York session, then click the link below and join us. But yeah, if you found this video helpful, make sure to like this video, make sure to leave me a comment down below, subscribe and turn on post notifications, and I shall see you guys on the next video.